Welcome to the Startup Grind.
Just to get things started, Jeff, just tell us a little about yourself, where you're from, what you did while growing up, sports, clubs, high school, etc.
Yeah, well, I'm actually from Orange County, born and raised in Corona Del Mar. I went to Carden Hall for elementary school and Sage Hill for high school. And then afterwards, I took a little bit of an excursion up to the Northwest, went to Lewis and Clark College for undergrad, and spent too much time focusing on getting good grades instead of getting Acorns started earlier. But what was really striking is, when I was pretty young, my dad got me into investing. And the way he got me involved was, he was an investment banker and would talk deals. And I didn't really understand that he was talking deals, but he would talk about a comic book company that he was raising money for, or he would talk about a candy company that he was helping raise money for. And I just cared about the comic books and the candy. But I think that he found an eloquent way of communicating how financial markets can connect to everyday life. And so when I was pretty young, I got interested in investing. When I was about 10, 11, 12, started with a little account that my dad had set aside for me, and it didn't have much money at all in it. But I was so excited to come home every day from school just to see if my account was up or down. And what was interesting is, if it was up, it was because of me, and if it was down, it was because of my dad. So when I got to college, I was quite an evangelizer for investing. And what was amazing is, so many of my friends and classmates, even if they studied economics or finance, they rarely had an investment account. And most of them even had play money accounts where they were pretend investing $50 million or $10 million. And I think it's more interesting to really invest $5 than to pretend invest $50 million or $1 million. And so the early ideas for Acorns started to emerge at that time. Really there wasn't a solution, certainly a mobile-first solution, for opening an investment account easily. And we had to address three main issues. First, we had to make it possible to open an account with no minimum, because when young people are starting, they don't have money to commit. We had to make it possible to invest without commissions, because if you're investing small amounts of money, you can't afford to pay $10 a trade, certainly if you're investing $5 at a time. And third, and I think most importantly, the selection for investments for a new investor is enormous. There are thousands of stocks, bonds, mutual funds, ETFs, and it's daunting. And when presented with too many options, the new investor tends to not make a decision or delay it significantly. And so we sort of combined those ideas into something that had an investment pre-selected where people can just control risk, where we connected investing to something that people were already doing, spending, and where we made it possible to invest small amounts of money frequently, so that people can get started earlier and invest money when they have it available. And we didn't really know that early on, it was going to be so new, this idea of micro-investing. Frankly, for the first year of Acorns, I was convinced it already existed and was somewhere else, and I was nervous to Google search for investing, loose change, roundups, etc. And I remember I would kind of blur my eyes when I would type in, as we were doing our early research.
Hoping no one would have the same thing already.
Yeah.
And, how that feels.
But it wasn't out there. And so we ended up finding a way to put it together, and we wanted to do it in a simple way. And it ended up taking a lot of time. You hear stories about startups out there where they hacked it together in a weekend or overnight, and Acorns is so not that story at all. The idea came pretty early on, but
how long from the idea that you had to where you guys are at now, would you think?
Between idea and just launching was about 2.5 years. And to work on a company for 2.5 years, and we had to do our Series A, our angel round, our Series A and Series B, all before launching. And so you have to have obviously a compelling idea to raise money. But for me, I had never put together a broker-dealer before, which we found out we needed to offer the experience that we wanted, or an investment advisor. And the regulatory process is extensive and exhaustive. But what's exciting about this regulated space is there is so little innovation in financial services in particular when it comes to offering new products, because it's a big pain. And so we were able to design a new product from the ground up, and we started with the user experience. I wanted an experience where the customer did not have to leave the app at any time, where they could transact in dollars and fractional shares instead of thinking about ticker symbols or the amount of shares that they're going to buy. And we wanted to make it extremely simple for customers to think about the risk that they're taking, what they're investing in. So we use colors and graphs and charts to communicate risk and return. And so we were putting that together. It was brewing really for a few years. We had some incredible investors that saw the vision.
All right. Do you have a mentor? Would you say it was your father, or?
Absolutely. I mean, working with my dad has been an incredible experience. For someone to come from the industry, yet to have such an open mind with innovating in the space is so refreshing. I mean, this is a space where people have done things a certain way for a very long time, and it's hard to innovate. And every time innovation comes, whether it's trading online and having commissions be $10 instead of $50 when you call your broker, there's always resistance to change. I think especially in regulated industries where it's hard for startups to come up and disrupt. And my dad's always told me there are no rules, ever. And I'll never forget, because when I was in school, I would get in trouble for different things all the time. And my mom would freak out, like completely freak out, which is fine, that's what mom should do. But my dad was always like, well, so, why did you do that? It's okay that you challenge. He's always interested in challenging the status quo. And certainly his support and confidence for working on a new type of broker-dealer is essential, because we were saying, look, we're going to strip it down and build something completely new. And every person in the industry that we talked to said, that's crazy. Do not do that. Work with something that's existing. Buy a broker-dealer. And my dad was there saying, no, I think you're onto something on this. Do it. Build it. You can do it. So we did.
Awesome. Now, Acorns is a very interesting name for a company. How did that originate?
It's funny because, when you launch a product, it seems that it's so fully formed that, Acorns has always been the app that it is now that we launched. And, when you're working on a startup, you don't have the name in your head, or certainly I didn't. It wasn't called Acorns until a year in. I think the early mock-ups that I had, it was just called micro-investing. And then the early version, it was index fund micro-investing. And then my dad called me one day, and he has a little ranch thing, a farm, and with a bunch of oak trees. And he said, from acorns mighty oaks do grow. And we were talking about that metaphor. And so he told me a story. He said, well, if acorns can grow into oak trees, then what can a small investment grow into over time? And so the first name for Acorns was actually really If Acorns. And If was a bit of a pun because If also stood for index funds. And eventually we dropped the If to simplify it and focus on Acorns. But really, Walter gets the credit for the origin of the Acorns name.
Awesome. So I was going to ask, what are the challenges you face being a co-founder, but it's you and your father who co-founded it, right? So I'm sure there's a lot more than just a regular two co-founders or friends.
I feel very lucky. You are tested in a quite extreme way. I think when you're putting together a startup, there's lots of emotions. I mean, you pour your blood, sweat, and tears into it. And what's nice is when you have family involved. Certainly, in the relationship that I have with my dad, is you never really question someone's support for you at the end of the day. And so you can really push each other professionally and push each other to the limits on really questioning certain directions and giving maybe intense feedback at times in both directions. But you can do it in a way where you don't lose your cool and don't question your co-founder's commitment, not only to the company, but to you as a co-founder. And that's extremely important to feel confident in the person you're working with.
Awesome. How did you successfully raise money for your startup?
So we talked to a lot of people, a lot of people. And eventually we found a few people crazy enough, I think, to back an early stage idea. You know, we put some money into the company initially and got an early prototype together. And so we were able to somewhat demonstrate what it's going to look like, how we're going to build it. Certainly Walter's previous industry experience was helpful in some of the communications. I was just with Jim Kakavo of Steel Point out in San Diego, and he was our first official investor. And I remember the meeting with him because he really backed a business plan to some extent. And it took a long time. It took about 2 years from when he backed us for us to really launch our product successfully. And you know, we met a lot of people, we talked to a lot of people, but we were honest about what we could do and what we couldn't do. We didn't promise that we could launch immediately and get it done. We said, look, this is going to be hard, but we think we can do it. And it's sometimes tempting to say, look, it's not that hard, we can do it, we're going to get it, we're going to, you know, put it together really quickly. And I think he appreciated the transparency and certainly liked the vision of the product.
Awesome. So if you had any advice to give to a startup or young entrepreneurs, any entrepreneurs in the crowd, what would be for raising money? Like what you did right, what you did wrong?
Well, it's show, don't tell. I mean, completely. You know, talking about what your product could be is very different than showing them what it is. And you know, even if you have a limited prototype, you know, people don't have much time, they're impatient, and if you show them something, they can at least visualize what it's going to look like. And then once you have traction, even if you don't have significant traction, if you could demonstrate that you have an understanding of, you know, how much it costs you to acquire a customer, how people are using the product, how they're churning out, et cetera, you can start to speak more eloquently, and I think people are more confident in giving you money. Really, it's to talk to as many people as possible, work your network, and find investors that are relevant to your space. I mean, fintech for us is a relatively, you know, unique space, and so talking to other fintech investors is helpful because they understand more why what we're doing is powerful or unique, and certainly some of the technologies behind, or certainly some of the technologies that power Acorns, that they understand what we're using, what we're leveraging, some of the recent innovations. They can start to appreciate why what we're doing is so new and why it's only possible right now.
When you were young and you were going out, were you a big speaker in front of people, or was it you stepped out of your comfort zones when you started realizing, wow, I can do this? Is that when you started networking with people?
I'm probably a pretty shy person in general. I think, you know, I was not a big networker at all in high school, ever. I focused on school, and then when I focused on Acorns initially, I actually didn't talk about it for months and months and months. And something my dad told me too, he said, you know, when you're working on a startup or a company or an idea, it's very easy to talk about it. And it's easy to feel good about yourself when you're talking about something without actually doing it. And I think something that's important to think about is, you know, that energy can go towards actually working on your product. And so I didn't even talk to some of my closest friends for months and months and months until Acorns was at a more mature stage. And when we reached that stage, I felt more confident talking about it. So I don't think I would have been able to BS it and talk about Acorns before we had a real idea of where we were going. I'm not saying our product was launched, certainly, but yeah.
That's good. Okay. Another question: what sets Acorns apart from like major stock companies that have other apps as well? Is it just being new, fresh, or user interface? I guess is really huge.
I think there's a few things. So you know. Early on, you know, I was very disappointed because I wanted to see how easy it was to open an account with Schwab. I had a Schwab account for a very long time. And to open an account with Schwab is challenging. And in the app world, in the context of how easy it is to get started with apps, it's extraordinarily challenging and effectively insurmountable for that world. And, you know, Acorns is powerful because it reduces friction not only through how you sign up. Signing up is quick and easy. The information we request is top of mind. You don't necessarily have to pull information from your check unless you're with, you know, certain banks, but most of our customers are not with those banks. But the other part is psychological. When you start talking about investing, most people think about retirement. They think about committing large amounts of money. And when you talk about large amounts of money, it's something people want to think about. And when you have an app, you're asking people to make a decision to download and get started in a few seconds. So you're not going to succeed if you're asking them to invest $5,000 or to pick stocks. But it might work if you ask them to invest spare change. And so spare change isn't just a unique vehicle that Acorns has to get people started and to continue to invest. It's a powerful tool to enable our customers to recognize that they can start investing with small amounts and to feel good about it. Because saying that you don't have minimums isn't strong enough. People might say, oh, I don't have minimums, but am I going to be the only $5 account that ever tries to get started with this company? And saying that, there's really no limit on what you can invest, et cetera. It's pretty similar to that. So spare change doesn't just hit home on a unique way to invest as you spend. It's a reminder to our customers that they can get started with nothing, or just a few bucks at a time.
It's and like your virtual little cup of change at your house, pretty much.
Exactly, and you have to reiterate it. I mean, when it comes to investing, there's so many preconceived notions on what it takes. Thousands of dollars or hundreds of dollars. We're thinking extra long term. And we want to spend as little time as possible getting in between people and getting them invested, and actually even changing the order of education in working on education after they get started with a few dollars when they're listening, versus before they start investing when they don't really care as much.
So I was reading one of the review questions on the app download page, and it says, not only does this app company have the potential to change the way my generation as a whole fears the idea of investing, it also has the ability to small player and overall push our economy welcome with open arms. So I guess you guys already kind of harped on that about, the spare change isn't so scary as a lump sum. And like for me, when I thought of investing, it was, I think of my dad and thousands of dollars. Mm-hmm. So, I guess you already kind of answered that question.
Yeah, I thank you for picking that review. We do have good reviews, but I will say it's challenging when you are a steward of people's money or moving money and dealing with investments. If anything goes wrong, any access to the app is limited. People tend to rightfully get upset. But I do think we're going to make a big impact because there's an incredible savings and investment problem in the U.S. I mean, people wait too long to get invested, but they don't waste any time to take on debt. And if you know how compound interest works, if you have it working in your favor, then time is your friend. If not, then it's the other way around. And so we want to change that. We want to get people invested earlier in life. We think that when people are invested, they will start to think about their debt in different ways. And we also think that once you create a repository for investing, certainly at an early age, you create opportunities for people to invest more frequently and certainly much earlier than they would otherwise.
What has been one of your most successful decisions or least successful? Or just, you can just tell successful if you want. You don't have to say least successful.
I'm fine to share it both. I think, I think what's nice for us is, when you launch and you refine a product over a few years, you get to be held up a bit as making a lot of great calls because the product is polished at this point, it's tested, etc. So it looks like, wow, you did a great job putting it all together. I will say one of the best investments we ever made was in design and focusing on design. And I do have to recognize David Keegan, our director of design, right here, who's largely responsible for our incredible app and design across the company. And he's played an integral part in that. And when we started to focus more on design, I think the rest of the vision of Acorns started to solidify as well. And there's something about products that look good, that are more trustworthy, and they work better. I think we have a quote on our wall that says, beautiful things just work effing better. I won't say the F word just because there may be young people in the audience. But I'd say that was one of the best calls we ever made. And then in terms of worst calls, I'd say early on, around the same time, we started to really think about user testing. But we were testing in a beta environment, and we got a little bit hung up on how our customers, potential customers, thought about our product. And investing is relatively complicated, and I'd say that wasted a lot of time for us because we were obsessed with testing. And I am all for testing the product from a QA perspective, making sure people understand registration, et cetera, but it was almost reaching a point of open-ended questions and inviting everyone else to build the product. And it's hard to turn that off. And at some point we have to be confident in the product that we're building and the value proposition that we offer. And so I'd say maybe that wouldn't be the worst call we ever made. That may be yet to be seen, a relatively new company. But hopefully that's the only thing that I can say.
So it started out with you and your dad, and now how big is your Acorn team? And can you kind of tell us a little bit about the culture of your team as well?
Yeah. So I like to say I work with 65 of my best friends. I don't know if they'll say the same thing about me. That sounded like something that Michael Scott would say. No, we've grown, but this team was small for a long time. Culture is important for us, but artificial culture is not effective. And I remember I was talking to a recruiter the other day, and they said something along the lines of, well, we really consider culture, and then we consider talent. And I said, if someone's not good at what they do, they're not going to fit in, because us getting along with them being friendly and great is going to wear off when their work is crappy or their work doesn't fit with what we're looking for. So I'd say, we have an incredible group of talented designers, engineers, marketers, salespeople that are certainly a heck of a lot smarter than me and able to make this product a success. And our recipe for culture is just to find amazingly talented people. We don't have a set character grid or personality grid for what we think fits our culture. We just find the best people that we can, and it's amazing. They tend to fit in, and what's great about that too is everyone's able to learn from new people, because everyone's very, very different at Acorns, I'll say. Even though they're all sitting with their legs in the same cross position in the front row.
Okay, awesome. So the last question I have for you tonight is, how do you hope to continue and change the impact of your industry?
So, for us, it's about scaling. We had a really smart person tell us the other day that, every problem for a startup is a scaling problem. And, for us, it's to reach as many people as possible, to get people invested, as many people invested early as possible, and we're going to continue to do that. And right now, it's making sure that we can keep up with it. And it's a massive endeavor. I mean, having a broker-dealer with hundreds of thousands of customers that's been in existence for a few months, we're handling trades, confirmations, statements, reporting, tax reporting for many customers. And we have ambitious plans to further revolutionize how people invest, to revolutionize how people interact with certain companies and brands out there, and finding ways for people to find money even outside of market returns, so they can optimize their experience with Acorns.
All right. Well, congratulations on your success, Jeff, and that's going to end the video segment. And give me a round of applause.
Thank you.